Talk about the markets. Still with us, Barbara Doran, Senior Portfolio Manager at BD8 Capital Partners, Paul Hickey, co-founder at Bespoke Investment Group, along with Sandy Villere, Portfolio Manager at Villere and Co. Great to see you all. Sandy, I'll start with you. What do you make of today's market reaction?
Yeah, well, I think it's just, light volume, but I do think this year we're in a complete market melt up, and so it's kind of an interesting time where things can get a little bit overdone, and I'd be kind of cautious here and look to maybe take some profits and sell some of those names in the portfolio that might be a little bit overvalued here.
And I wonder, Barbara, if you think that you do get some selling once you turn the calendar over. People don't want to sell now, right, for tax purposes. You get to January, maybe people are taking a look at their portfolios a little closer, say, you know what, I've had a lot of great gains this year. Let me come back off the top of the mountain.
I think it's the right question. I think we're all debating that. It's because you see this kind of a run, you go, it's normal to take profits. And I think you're right. There's been hardly any losses to offset tax gains if you're a taxable investor. But I think, for the reasons Tobias talked about earlier, I think sentiment is not overdone here. I think institutions are really in the midst of repositioning their portfolios toward more cyclical industrials, wherever they think they're going to find earnings potential greater than where they've been. And I think that's going to continue into January. But frankly, I wouldn't be surprised either way. But if there is a bit of a pause, I think that's, you wait and see, and then you can buy, stocks that you want to add. Because I think there's a lot of cash still coming in and still needs to come in.
You do, Paul. Generally, when you have a year like this, I mean, you look at market data, as closely as anybody. You do traditionally get a positive year following a strong year like we've had.
Right. So what we do is, in our year-end outlook, we look at the market from like a ton of different angle and viewpoints. And what we're seeing is, well, there's nothing really suggesting a rip-roaring rally for 2019 or 2020, so I'm dating myself, but there's nothing really to suggest, below average returns either. So normally we see an outweighing of pros or cons versus the other, but right now it's pretty much evenly split, and I think that leaves you with the main thing to watch is the Fed here. And as long as the Fed sticks to its words, and they did a 180-degree turn last December, so it's possible they could become more hawkish, even though they basically said they haven't been. But if they don't, and the economy remains stable, the path of least resistance is higher.
On that note, we've been looking at some of the big outperformers this year. I just want to draw our attention to shares of AMD, leading the NASDAQ 100 today, closing up by more than 2% after RBC upped its price target to $53, citing solid channel checks related to gaming chips and data center sales, which the firm says is a positive for NVIDIA as well. And Barb, I would point out, this is actually one of the best performing stocks on the NASDAQ for the year, not just today.
I know, and it looks like that performance can continue. The RBC note was interesting because they had done their own channel checks. And if you look at what share they have in the server market, I think they do maybe a couple $100 million, if that, and it's a $10 billion market. So all they have to do is get, a little bit more share, and that's a positive. And they obviously sell into the gaming market, which is a nice, steady, secular grower. So I think it's a good call. Again, when you've had such a run and all the semis have been performing, you go, okay, is it overdone at this point? I think there's probably a bit more to go.